afternoon, good night, everyone. How is everyone doing today? Wow, what a week, huh? What a week, my friends. What a week. It has been somewhat of a crazy one, I would say, but hopefully everyone is still alive. And have energy for what's still to come for this year. Lots of things are happening, and really interesting how market is getting shape, I would say, the last couple of days, especially after Saturday and Sunday, when we had the whole Trump and China sort of trade deal. But it's interesting because a lot of antipodiums. Can't say that word. But a lot of the Asia sort of Pacific currencies like Australian dollar, New Zealand dollar, Canadian dollar a little bit as well, I guess. All of them, got a lot of strength. Majority on Aussie and New Zealand dollar, because they're more like risk on currencies because of the commodity sort of related part of the game. So we saw, oh gosh, I'm not sharing my screen. Sorry, guys. So we saw a big move on like Aussie against the US dollar, Aussie against the CAD. We saw big moves down on Euro Aussie as well. Like pound dollar as well. The trader got short on GBP AUD. The whole structure, of the trade is still the same. And that's exactly what I've sent today, like how to manage trades properly, not look into emotions, but manage the trades correctly. Will tell you if you are a trader or if you are just someone clicking on the buy and sell button. And don't get me wrong, if you are that person just buying, clicking and selling and buying, it's completely up to you. But I guess that the way to trade is with data, is with context, is with the fundamental, and not with lines on a chart. If you stop and think for a second, what are the big hedge funds using? I don't think they're using like TradingView, for instance, like putting lines, or MetaTrader. They're most likely using Bloomberg, Newsfeed. They have like even indicators that most of you guys maybe don't know about. So where the sentiment of the market is risk on, risk off. This is all of the things we should be paying attention. And this is a masterclass. Trump is giving us a masterclass into how to make money into the market. Now, today's Wednesday, so Finlogix Sentiment Tool is the one we're going to be looking at. Few things I have to say before we start. Welcome. I see some new names here, so I guess some new names. So Latif, welcome. RS as well, welcome. Another person just joined us as well, Ganiyu, welcome as well. Everyone, if you have any questions, please feel free to just send me on the chat. You can send it there, and I will make some time. Once I have some time to look at the chat, I will look and answer those questions for everyone. Cool. If you don't feel like sharing the question with everyone, not a problem. On the chat, you have two, so you can change to everyone. You can change to me, Luca, and then the question will come direct to me and one go to everyone. So I will read the question and one say your name as well. Okay. Cool. I guess that would be it. And second thing is we're not going to be having webinar tomorrow, unfortunately. Baseline is I won't be in the office. So I won't be in the office for tomorrow, so Thursday, for Friday as well, and for next Monday. So the 15th, the 16th, and the 19th. Okay, so you guys will be all right. You guys will be fine. Don't stress. If you have any like, oh my God, what's happening here? Luke, explain to me. Send me a chat on the Telegram. and I will probably going to have some time during this time, and I will answer you. Cool. Now that all the, I guess that's it. I've noted down a few things here. So yeah, as we go through, I will say other things. But before we start, it's usual. I need to put the risk disclaimer up. I'm going to leave there for a minute or two, and then you guys go through, read it, and then we'll be back soon, and then we can start. All right, cool. I'm back. Let me just take this off. Perfect. So someone asked, please, once your session ends, we cannot have access to your anybody anymore. Okay, so there is a replay. Okay, so you won't be able to access the Zoom again, but after maybe like 24 hours to 30 hours, let's say, we upload this to the YouTube. Okay, so if you come to ACY Securities on YouTube, I'm going to send the link to you. Just a second. This channel here. So YouTube channel. Cool. I've sent on the chat. So if you come here, you will be able to see the replay. Okay, so you come to videos, and then like look this one. So this one was 5 hours ago, and that's from yesterday, from Tuesday. Okay, so if you click here, you can see exactly what we did yesterday. Okay, from Tuesday, and then goes like that as well, like from Thursday, from Thursday, and etc. Okay, last Thursday. So that's how you have access to it. Okay, so give us a time, 30 hours after this, so the next day, because the video has to be edited, and then usually when that ends is already 5-6 p.m. So we post on the next day. Okay, and if you're not subscribed, subscribe to the channel, because we're posting content every single day, and it's really great for the knowledge, for your knowledge. Okay, to follow us. Cool. All right, that being said, let's go to Finlogix. I'm going to send the link in the chat. Okay, so you can access Finlogix for free. We don't charge anything. Finlogix is a sister company from ACY. It's basically a charting platform, but more than that, is a helping tool as well for traders, for new traders, for beginners, for experienced traders. You name it, we help. So you have here the chart. You have tools, news, learn, and then pricing is just if you want to pay for it. But the tools is economic calendar, earnings calendar. If you trade stocks, I don't trade much stocks, so I've actually never traded stocks. I think. And let me think about it. No, I've never ever traded stocks. So, anyways, but you have here the earnings calendar. If you do, the market sentiment tool. That's exactly what we're gonna be using today. And then just the Finlogix widget. So come to Finlogix, go into tools, market sentiment, click in there, and that's exactly what we want. Takes a few minutes to load. Cool. There we go. Perfect. So this tool gets updated every 15 minutes. So the next update will be at 4:30 Sydney time. Well, the last one was 1 minute ago. So easy way to explain this is, if the majority is short, we're going to go long. If the minority is less than 10%, we're going to go to the majority. Okay. But today I want to do one thing different. I want to go and explain what just happened into the market, and then I will come here and do this. All right. So For those who have been here yesterday, I guess majority of you, it's pretty cool that everyone comes back every day. So that's very nice. So we had the CPI surprise, so China deal as well. So anyway, so the market started the week with a very strong rally following the headlines about the new Trump-China trade deal. But that optimism quickly shifted to caution, because a lot of the attention was to the latest inflation data. And the quick question was pretty simple at that time. Will Trump April tariff push inflation higher? In my conception, that was the main question that the market was asking, right? So far, the answer appears to be not dramatically, because we did have the CPI release yesterday and it came in slightly softer than expected. It offers some sort of short-term relief, but that did spark some fresh hopes that the Fed might ease sooner. But those hopes, they're running into resistance from the bond market. Okay, so because if we look to the futures like CME, is still pressifying only 2 cuts left for the whole year. So the headline CPI came in at 0.2% month over month. So I'm just going to economic calendar. There you go. So you guys can look at here. Just below the forecast, as we can see, but several components, they undershoot the estimates by about 0.1%. It was not a huge downside surprise, but it helped to calm the inflation fears for now and helped to calm the recession fears as well. But there's a deeper concern now, and that's emerged from the core inflation. So the core inflation is a measure of services inflation excluding housing, and it rose 0.2% after negative reading the month before, as we can see it right here. So since the core CPI is one of the Fed's preferred gauge for the sticky inflation in labor-intensive services, that rebound complicates a little bit of, for the near-term rate cuts. So that's exactly what I think that's exactly why I think they won't have any cuts soon. So the Trump tariffs, since 2nd of April, that's like literally 1 month and a few days ago, it's also being debated. So most countries saw tariffs reduced to 10%, but China is facing a nominal 30% rate. In reality, Chinese imports are being hit even harder due to lingering duties from early rounds, and the impact on price is still unclear, somewhat. Okay, so I think that most likely all of the firms around China will absorb the cost for now, but they will soon pass it to, because they won't be able to absorb forever. So the sooner will be passed to consumers. So if we look through the CPI components, gasoline prices were down 11.8% on a year over year. And this is one of the biggest deflationary forces in the data. But on the other hand, electricity, natural gas, meat, fish, eggs, all of the pretty much the food components and used car, except for used car, there's also a up move. Okay, user price car showed a 0.5% monthly drop, and that's likely reflecting some seasonal adjustments rather than actual price declines. But for the first time in several months, the goods price posted slightly month-over-month increase. So that shift may be early evidence of the tariff-related costs into the consumer prices, because business, as I say, business will take the price, will take the loss at the beginning, but then they will have to price to the consumers very soon. And that's exactly what's starting to happen already. So that shift may be early, saying to me that the tariff-related cost pressures is coming into the consumer prices. The producer level indicates a much more, flashing a lot of warning signs. So but both ISM manufacturing and ISM services prices index, they have been rising, and Chinese exports prices are firming as well. So that combination points to a potential inflation ahead, right? Potential more higher inflation. And that number maybe is just a pullback. maybe Trump will come to the meeting and say, look, it's working, blah, blah. Look, my tariffs is working, my trade is working, inflation's coming down, labor market is good, blah, blah, blah. But that's not reality, because that is just an inflationary prices into the inflation, okay? Well, I guess that if we look to currency, right, the dollar sentiment turns very extreme. So the dollar is now facing one of the largest net short positions in recent memory, and investors have shifted heavily into the Eurozone assets relative to US assets, and that's pretty much because of the better than expected European data. And that's very risky, okay? When position becomes this one-sided, like it gets completely away from one side and gets all the way to the other, that makes sense that the odds of a sharp reversal increases. You know, the dollar weakens slightly, not that much on the CPI. Let me just bring the DXY here. So it's like since the opening, since the opening, we had all this big move here. And then we had this uptick on the where it is. There we go. So right here on that move, oh, that's a 4 hour. Let me put it into a 1 hour so you guys can see the uptick. So right here, we had that move up into the CPI, but that was it. And then the move continues to fall. Don't forget that we have a gap to fulfill. So most likely Eurodollar will continue to go up for quite a bit until it hits close these gaps. And then we'll just add Eurodollar here. Perfect. All right. I need this one to go. I know it's going to look like confusion, but wait. So it's exactly here. Okay, so we're seeing the Eurodollar, and that's, let me just take this off. And that's the gap from Eurodollar. So basically, we're looking at somewhere around here. So US dollar index coming below this area, and Eurodollar coming above to this 1.12400. Okay, and that's when they're going to meet. And it's going to be pretty interesting to see what's going to happen afterwards. Cool. So that being said, let me just take this off. You know, it's very risky, as I say, because when the position becomes just one-sided, the odds of a sharp reversal increases a lot. And remember what I was saying, you know, this is just a inflationary move right here. Most likely what we're going to see, it's a continuation down, okay? So these are the times to look for other currencies to be longing against the US dollar, okay? It's a discount price. So anyways, so the dollar, it weakened since the CPI, as we can see. The CPI release was right on this candle here, right here. And since then, we just saw the weakening, okay? I guess that any reacceleration in US inflation or signs of a stronger growth, it could send the dollar higher and very fast, but we don't have that at the moment, okay? So the coming days, it may be shaped by small OPEX expiration on the 16th of May, so Friday. 90% of index options have been calls, so market makers maybe need to buy futures to hedge, and that could support equities through midweek. But you know, after expiry, some of that support may unwind, and we'll be introducing some potential downside pressure into the weekend. So just to finalize here, you know, I'm just trying to do a catch up. So we can say the risk is still off. No, the risk is on. The risk at the moment is on, and I'm going to show you how you can measure that very soon, okay? So if the 10-year, all right, if the 10-year yields hit 6%, so we're not that far, my friends, we're not that far. Let me just go for daily. You look at yields on a daily, all right? So if I know it's far away, but look, it's not that far when you think about what can drag the price up there. So if the 10-year yield hits the 6%, the consequences of the US debt sustainability and the consumer borrowing would be like massively severe. Okay, so this is no longer a fringe view. Some in the bond market are preparing for that possibility. Okay, so it's not about, okay, it looks far away, but still. I was reading some Goldman Sachs reports, and they have they remain relatively constructive on equities, but they argue that the tariffs may ultimately boost US production and investment. But these, of course, will depend on how the business and the consumers respond to the higher costs. Really interesting to see that in the coming months. But anyway, so in the meantime, the inflation picture remains very fragile, and the Fed remains concerned. Okay, remains concerned and remains cornered as well. Like it's literally someone is punching you. Not that hopefully anyone here had that experience before. I didn't. But anyway, someone is punching you, and then you're on the octagonous ring, and then you're literally on the corner. Okay, that's Jerome Powell. Inflation is punching them, and he's literally on the corner. Right? He doesn't have a way to escape. The US will continue to dominate global markets, of course. I think there's like $1.9 billion companies. Like just for comparison, German has just 143. So the dominance is real, but it doesn't make US asset immune to macro risks. And that's what people have to understand. Right now, all the eyes, everyone, all the banks, all the institutions, all the hedge funds, pension funds, it's on inflation, bond yields, and the tariff transmission. Okay. So if we have a headline, or if we have the Fed talking about inflation being hard to control, or having to maintain the rates higher for longer because they still believe that the inflation will tick up, that's a very concerning part of, okay? If bond yields, especially the 10-year, the short and the long term, anyways, when I mean short term, I mean like 2 years, 1 year. When I mean long term, 10 years, 15, 30 years. When those TPUs, when the short TPUs and the long TPUs keep rising, it's going to be a problem, right? So bond yields as well. The tariff transmission, if Trump says no deal with China, no deal with anything else, well, I don't care, man. So that's a problem. That's a lot of problem. Inflation would be dragging high. So the CPI print gave a moment of calm to the market, but the producer price pressures and core CPI inflation, it's basically screaming at your face saying that inflation is still sticky. Okay, so it's basically sending warning lights, and that's very, I would say, very dangerous. Okay, so stay alert to shifting the bond yields, signs of margin pressure in earning reports, and any change in inflation expectations. Right, so the tariff effect may not be immediate, but it's building the waters. But it's building the waters for a very rough sea, I would say. So that's my catch up. Hopefully you guys could catch up but majority of you were here yesterday. So if we look to Aussie dollar, right, AUDUSD for instance, you can see that that's a daily chart. So let's go for one now. You can see that was a huge move up on AUDUSD, right? So so from back here to all the way here, that was pretty much here as well, was pretty much the US dollar losing its strength, okay? So US dollar lost in strength, Australia dollar gaining strength. Basically for two reasons, okay? First reason is after China and US had a trade deal, they both were, like, if you look at Aussie Japanese yen as well, all of the Australian dollars, okay, Aussie CAD, Euro Aussie, if you look, it's going down. GBP AUD going down as well. Yeah, so you got it, right? Majority of the Australian, even like NZD-USD, forgot the New Zealand dollar. So NZD is going up, NZD CAD is going up as well. Euro NZD is going down. What else? NZD JPY is going up. So you got it, right? So majority of the Australian dollar and the New Zealand, like look at CHF, for instance. Look at Aussie CHF. Has been a beautiful trade. Anyways, so all of those type of currencies, they are to risk on markets. Okay, so every time that the market is risk on, they tend to benefit. And if you look at gold, gold is going down. Okay, and I've mentioned about gold is going to pull back somewhere around here. I'm shorting it, and then that's it. So if you stop and think about, is there uncertainty on the market? It's still. Is there like, because there's only 2 days, okay? So today is Wednesday. It's pretty much finishing Wednesday for me now, but still. It's the market is still digesting what happened with the CPI, what happened with over the weekend, but there's a lot of gaps, okay? I'm not the guy that says like, oh, if there is a gap, you have to trade that at the close of the gap. It's very hard because it can take a lot of time. But just for instance, okay, if we look at USD CHF, we look at USD CHF right on the Monday opening, we had a huge gap up, okay? And that's from market-wise. All the price providers, you will see, and you will have a gap, all right? So you can see right here that we have that gap here, all right? What will most likely happen is it will have to come back at some time. I'm not saying about now or in the next 2 hours or the next week. It will come back at some time. If you look at gap, if you look at other gaps like this one, you know, like we had a huge gap on Monday opening, and then it closed on Tuesday. So let me check, where do we have more gaps? Just want to, maybe we don't have much gaps on this CHF. But yeah, there we go, another one. Monday, and then close on Monday. There you go, another one here. Opens on Monday and then closes the gap on Tuesday. Okay, so those types of gaps, they tend to get closed pretty quick, and these ones are actually taking some time. So even if you look at euro dollar, for instance, right, we have that little gap, still have a tiny bit to be closed. So most likely, even like if it's not on there, we have here, all right? So either one we will have to close. So if this goes down, basically we have euro dollar going up, okay? So that being said, guys, I think I finished my market recap. So now let's go to Finlogix, because we don't have much time, but I thought, you know, that would be really great to explain for everyone. So market sentiment. I'm taking a line. Okay. So few neutrals here. All right. So I guess everyone sort of got about the risk on and risk off, right? So if you have a risk on where we are at the moment, Japanese yen, CHF, all of those kinds of stuff will be off, will be bearish. Okay. So for instance, we have Aussie Japanese yen on a strong buy, but it's below 10%. Remember what I always say, if it's below 10%, I do what the majority is doing. Okay, so let me open here. Aussie JPY. Okay, so that's a 1 hour time frame. Cool. So what I reckon is we do have a really big gap on Aussie Japanese yen. Okay. So we have this gap here that I'm looking to close right here. And it has been already Wednesday and that gap hasn't been closed. So what I'm expecting is, I'm not expecting to close like today or tomorrow. As I say, we don't know, but eventually we have to be closed. And it has been rally a lot. This is a really, really risky trade, okay? Because most likely what we're going to have, it's a continuation upwards because of the Australian dollar has, it's a risk on currency and the market is still risk on. Therefore, we're going to continue to see a move up until somewhere around, I don't know. But anyways, but if you feel like to, I guess shorting somewhere around these levels here, where the price is, putting your stop losses above, oh gosh, sorry, above somewhere around those levels here. And you take profit right on the gap close that is on 93,500. Somewhere on here. Oh, sorry, 93,500 here. It's a very good trade. Okay, so the risk reward is pretty much 1 to 2 here. Yeah, but again, it's a risk trade. Just because of the Australian dollar has been pretty strong. Okay, that's the only thing I would take care of. Otherwise, it's a good trade. Cool. Aussie CAD, strong buy below 10%. Again, below 10%. For those who have been following me for three weeks, most likely you saw that I was long on Aussie CAD since down here. And then I added another position here. And then I added another position here. And for those who don't believe me, just look at the Telegram. So that trade was pretty good. I guess we are coming to an end of this trend, at least for the short term, and I'm looking to short that market somewhere until levels of, where it is, there you go, until levels of somewhere around 86, 89, 500, okay? Again, it's a very risky trade just because of the AUD still strong. I don't have any long positions anymore. I took profit on everything. I took profit everything on here on 90 cents. So I took profit everything on here. I actually was sleeping. The only position I have now, it's GBP AUD running shorts. That I got from yesterday before go to bed. Yeah, that's the only one. Yeah, I got short somewhere around over the top here. Okay. So anyway, so just coming back to Aussie CAD. Yeah, Aussie CAD is a good trade again. There's no gaps to be filled here, but there's a lot of other gaps into all the Aussie parity. Okay, so it's just be careful with this trade, but it's a good trade as well. GBP Japanese yen looking to long makes sense because Japanese yen is very weak at the moment. Okay, so if you look to GBP Japanese yen, just very, very long already. I think we missed the boat. We would have to wait for that 5% to become, to that 15% to become like 9, 8, 7, 5% and look for shorts, but not looking to get into this trade at the moment. But it does make sense. Aussie dollar long, well, we just saw that on here. We just saw this one here. Again, there's no gaps here. The gap that we had, it was closed already. So I guess most likely we will have a comeback, but for that, because AUDUSD is very bullish. I think from the 65 level, we'll probably retrace somewhere around 64. Okay, so just keep your eye open, and if it retraces, then a long should be good. Just watch for the US dollar index. If US dollar index continue to fall, that is what we're expecting to close this gap. Most likely, that's what's going to happen. A long position should be good. GBP USD, euro dollar, pretty much the same. I would be looking to long, but just at the moment, it has already took off at 1.11 would be my entry. If it comes back, we still have a tiny bit here to be closed. If it comes back, yeah, I would take that trade long as well. Same for GBP USD, nothing changes. Okay. Yeah, GBP USD a little bit ahead, already closed the gap right on Monday open as well. Okay. GBP USD long, I wouldn't say that because I'm short. So just leave that aside for US dollar, Japanese yen, and EURCHF. Now, CAD JPY, New Zealand JPY, short. Well, as I say, there's always an option to short that type of market, but just be careful. Maybe use stop losses or sort of understand what can happen and when that trade goes against you, because when you're trading a risk-off, when you're trading a risk-on market like a risk-off market, most likely the trades will go against you. But just try to manage that and not emotionally, okay? And in a sense of, okay, how's the market trading? It's more bullish, more bearish, and you should be fine as well on that one. Yeah, those two here. Euro pound, strong sell. Wow, interesting. Let me check that one. Oh, wow. That has been a massive. Yeah, nice. As you say, I think I've been talking about euro pound quite a while now for this guy. But somewhere around those levels, I think I've been chatting with everyone already. 83,600. But I think since it was here at 85, all the way down, pretty cool shorts. Yeah, but that's pretty much it. All those other ways. Look into gold as well. Gold has been pretty good to trade in this scenario. If we are risk on, look to short gold. If we risk off, look to long gold. Maybe we can still have a pullback into gold somewhere around levels of 3,160. So continuing to short gold would be interesting. Okay. All right, cool. So that's pretty much it from me today, guys. Hope everyone could take something out of it. Stay tuned because, as I say, any headline will move the market. Okay, true CPI, if bond yields continue to rise, short terms or long term, they will continue to move the market. Thanks everyone for coming today. As I say, I won't be here tomorrow, so hopefully everyone can have a good rest as well. And I will be back on next Tuesday. normal. All right. Cool, guys. Thank you. Have a great weekend ahead, and I'll chat to you next week. See you. Bye-bye.